All right, everybody, I'll go ahead and start today's meeting. I hope I'm sharing the screen with everybody on Zoom and y'all can see it on the board up here. Good day, everybody. Hope everybody's doing well. And let's get started because we have a lot to cover today. This is our general meeting agenda for today. A lot of topics. We'll have a social event soon, our guest speaker at the end, and some final items about the MD elections coming up on April 20th. And first things first, outperforming moments. Give me 3 at least here this week. Anybody outperformed recently? Someone on Zoom, possibly? Anthony, oh, sorry.
I passed my second derivative market exam, barely, but I still passed.
That's passing. Impressive. Can y'all hear me? Yes. Okay. One more. Got good stuff going on here for our members. Go ahead.
So I got another A on one of Sweet's papers.
Congrats. Nice. Okay. Amazing outperforming moments, y'all. Today's quote of the day today is empty pockets never held anyone back. Only empty heads and empty hearts can do that. So I think this quote is quite impactful and for itself there. Strive for what you want, y'all. And sign in. We are going to give away the 2 gift cards as usual. And the sign-in document is open. I made sure this time. So quickly scan that. And I do ask an optional question once you submit your name. Hinting towards some food in our next meeting. So go ahead and post that. And thumbs up once everyone's done signing in. Pretty quick here. Thank you. Okay, great. Let's continue to our social event that's coming up real quick. Just a quick little mention. So our next social event will be at Chicken and Pickle on a Saturday, I believe, April 29th, which is right after our final meeting. And our final meeting is officially going to be April 27th. So hopefully we'll see each other at the final meeting and at our social event. But more details to come for this as for exact time and what exactly we'll be playing. So keep posted on our socials for that. Now we'll move on to the market outlook with Anthony. Quick round of applause here.
Good evening. Here's our itinerary. We got our market movement for equities, commodities, and crypto. We got our selected earnings this week and next. We're going to cover a little bit of news, the weekly reading, and then an update on the market watch competition. And so we can see from this chart, from our price change from last meeting, all markets are down except gold at 2.2%. We have the NASDAQ down a negative 5.9%, followed by growth stocks at 5.4%. Here's our price change year to date. All markets down except gold's up, as well as oil at 36.4%. And here's our price change the last 12 months. I like this chart. We can see the S&P is up 6.5%, oil 6.8%. As we can see, the markets are down with emerging markets down 16.9%, followed by the Japanese Nikkei with a negative 10.0%. Let that one marinate for a moment. Here's our sectors, the price change since the last meeting. We can see tech is down 6.6%, followed by communication services. Energy is up 3.2%. Feel like it should be up a lot more than that, right? Here's our price change year to date. Most markets down, with tech being down 15%, and communication services at 15.9%. Price change year to date on energy is 41.2%. Here's our price change the last 12 months. Same story, energy up 65%, communication services down 10.1%. Here's our sector heat map. We can see most sectors are down 1 to 2%, except for auto, energy, and industrials. You can see Tesla's recovered, Apple and Gamble's down. Here's our crypto. And so we can see that over the last week, over the last 7 days, all crypto is down, with Cardino at 16%, XRP at 11%, Solana at 15%. Thank you, Jake. And so we got USD and coin flat, but in the last 24 hours, most are up a few percent. You can see from those volatile charts on the right. I thought we were past the crypto winter. Here's our most anticipated earnings for this week. These are all the mega huge banks, as well as the asset managers to start off the earnings season. As we can see, we got CarMax. I love Albertsons. So I believe they closed down around here about 10 years ago. We got JP Morgan, several airlines, Delta coming in, BBY, PNC, Goldman Sachs, Wells Fargo, United Health Group. Anybody ever been to a Rite Aid? We got anybody that has a personal connection to a company up here?
CarMax failed me, bro.
As we can see as we will see from their earnings report, or we'll see from a chart right here, you'll see how much inflation has affected used cars. But yeah, they failed me too. I tried to sell my Camaro to them. And so here's our earnings reported this week. You got JP Morgan Chase. They missed on EPS, beat on rev. You got BlackRock, beat on EPS, missed on rev. Delta beat on both, which is really good. They got a good story going on there. They have their revenues and sales are way up. BBY missed on both. We got First Republic Bank beat, as well as Fastenal. Here's our earnings reported next week. We got Bank of America. We have Bank of New York Mellon, which is BlackRock's main competitor. You have CFI Technologies, Guarantee Bank Shares. I don't know if that's a French company, but Synchrony Financial. And so we're going to talk a little bit about Goldman Sachs as they are set to report. And so they're set to report at Thursday's open. Their stock hit a record high of 426.16 in November of 2021. And it's currently trading at 320. The stock's prone to big moves. And so we will get to see what's going to happen on there. As you can see, it closed today at 321.97 for a 0.68% increase. Here is their 1-year chart for GS. And as we can see in this month, they've gone way down, right, in the past year. So they opened today at 315.8 and closed at 321.97. We'll do a closer look at the technicals. The stock is below its 25, excuse me, the stock is below its high, and that means it's already a bear market, meaning it's below 20%. And so it's trading at below its 50-week average, so it'll stay that way. And so with everything going on with the Federal Reserve, there's not much that the Biden administration can do on top of that to help bring down some of the inflation historically, but we can see where inflation is right now is at 12 years. We all know that's hitting us at the gas pump. Used vehicles in relation to CarMax. And of course, it's just about everything that you can kind of imagine post-COVID, right? Rental cars, airlines. And so I wanted to, as y'all know, I've been following the Russia default issue with some of their bonds, as well as they had one of their railway companies get with the pretty much get a technical default because they did pay, but it was in rubles. Because obviously they've pretty much been shut out from the SWIFT system. And so technology companies led gains in stocks with bond traders pairing aggressive bets on the Federal Reserve hike amid speculation. I believe that most are saying that inflation should be topped out at this current point. And you can see these are just some of the bond rates. I like it because it just helps me become more familiar with looking at these rates and looking at historical ones too. So here's the 1 year for the 3 months Treasury. Significantly in the past 4 months. So here's my weekly reading. There was a big chapter this week. He basically covers things that he thinks works with fundamental analysis, pros and cons. He covers the efficient market hypothesis. He goes over some forecasting challenges. He gives about 20 examples of things that, of course, he's seen over his career. And so one of the examples is when it comes to forecasting, utility industries, it's very stable group of firms, but there are unpredictable events that can happen that can significantly affect it, such as state public commission rulings and also fuel prices. And then he talks about biotech firms, right? When they're bringing a drug to market, some of these firms can, there's a lot of money involved and then they fail the phase 3 trial. And so that can either happen or there could be a breakthrough drug or patent that disrupts their market. Ooh, I know y'all been waiting for this. So here's the Market Watch competition. It's winding down. Top prize is looking good. April 20th, they'll wrap up. As we can see, Big Whalen's in the lead with 1,800.
Originally bought all in on CarMax. It didn't work.
And then you sold, and what did you trade for?
Mutual brand?
You said Mutual Brand?
Brand.
Nutrabrand, a grain bar. Cool. That's awesome. So and then I'll have my last Capital IQ class this Friday. This Thursday at 4 p.m. in the FSC. If y'all could please join me, it'd be great. Working on some cool stuff. And I'll pass it on to Jake. Thank y'all very much.
All right. There we go. Today, we're going to talk about global interest rates. We're going to take a look at inflation and impact on select goods, as well as March's PPI. Next, we're going to look at an economic outlook on Goldman Sachs. And lastly, a recommendation. So the first central bank we're going to be looking at is New Zealand. Their bank is called the Reserve Bank of New Zealand, RBNZ. It recently raised its rates by 0.5 percentage point, and this comes as their 4th consecutive increase, and it's their longest streak in 2 decades. The last streak that they had was May 2000. And they also have rates to increase by another 0.5 point at the next meeting. And they expect their rates to hit 3% by the end of the year and about 3.3 in late 2023. So does anyone here know what the New Zealand economy is, what their primary functions are, what their exports are? So it's actually farming and forestry. I found this surprising. They export agricultural commodities such as dairy products, meat, forest products, fruits and vegetables, and wine. And their dairy exports to the United States totaled $4.2 billion US, and that was approximately 10% of New Zealand's total exports. The next central bank we're going to look at is Canada. They also had their biggest rate increase in the past 2 decades. The overnight rate increased by 0.5 percentage point from 0.5% to 1%. And they also intend to reduce their assets on its balance sheet beginning April 25th. Less surprising than New Zealand, their main industries are real estate, mining, manufacturing, and energy. And aside from New Zealand and Canada, as we mentioned last week, the United States Fed, they plan to raise rates by 0.5 percentage point. And I believe the meeting is the 3rd and 4th of May. So here we have a 12-month change on the CPI, similar to what Anthony showed. Here we can see where inflation has hit the hardest. Of course, gasoline coming from Russia-Ukraine conflicts. Airline fares was a big one. You look at energy, goods, services, and food. Some of these were very interesting. Apparel coming in at low. I found this chart really interesting because I didn't think about how inflation impacted select goods like this. So next we're going to be talking about the PPI. The PPI measures what suppliers are charging businesses and other customers. It's often used as an early predictor of inflation. So in March, the PPI increased 1.4% compared to a 0.9 percentage gain in February. The increase in producer prices was a signal of strong demand, and it was met with supply chain disruptions, which was pushing the prices higher. Now producers have to face higher energy costs due to Russia and Ukraine conflicts. Next, we're going to look at Goldman Sachs. So currently they employ 43,900 employees as of 2021. They have locations in New York, Houston, Dallas, Miami, and essentially everywhere else. Their economic predictions for 2022, I'll go ahead and put the full report in the Discord. It was about 22 pages and it's very interesting. But they expected sluggish performances in China as well as Brazil. And on the report, which was published right before 2022, they were very bullish on Russian energy, which I found interesting. Of course, they couldn't predict the conflicts, but Goldman Sachs was actually one of the first people to pull out of Russia when we saw the waves of companies pulling out of their business in Russia. So here's part of their outlook in 2022. This is a quote from the report that I'll post. Although the fastest pace of recovery now lies behind us, we expect strong global growth in coming quarters, thanks to continued medical improvements, a consumption boost from pent-up saving, and inventory rebuilding. For 2022 as a whole, global GDP is likely to rise 4.5%, more than 1 percentage point above potential. So we'll see how their predictions looked when we go to mergers and acquisitions, but I'll post that full report. It was very interesting. I definitely recommend you read. Lastly, my recommendation today is a source. Stock market news on Instagram and Twitter. Regardless of where you follow, it'll be the same content. So these are just screenshots of tweets, which will go on their Instagram. I thought it was really interesting just because it's really kind of short segments and it's always sourced from somewhere else. So it's not like you have to read a full Wall Street Journal article. And they post very frequently. They post, I think, I found them sometime last week, and they post 20 or more times a day. So Qualcomm, a company I'm pretty bullish on, we can see they have dividend updates right here. And then they are tweeting an update about Shopify proposing a split. So if you want to go ahead and give this account a follow, I definitely recommend it. I think I'm going to use this as my primary source of like information now, instead of having a source from all these different like Wall Street Journal. It's all in one place. Oh, not going to do this one. So thank you. If you'd like to connect, here's my LinkedIn on the QR code, or if you need to email me about any of the sources or anything else, here's my email, and I'll be around after the meeting. Lastly, we have elections coming up, so I highly encourage everybody to run for a position. Last semester, I didn't know if I was going to run, and it turned out to be something that I actually really liked, so I'd encourage everybody to run. Elections will be next week. So here's Juan Carlos with mergers and acquisitions.
Perfect. Good afternoon. Today we'll talk about Goldman Sachs acquiring NNIP for 1.7 billion. First, we're going to start with the history of Goldman Sachs. And a little background on Goldman Sachs. Goldman Sachs is a multinational investment bank and financial services company headquartered in New York City. Goldman Sachs was founded in 1869 by Marcus Goldman, a Bavarian, present-day Germany, school teacher who emigrated to the United States. The company issued its first IPO in 1906 when it took Sears and General Cigar public. It was during this time when Goldman Sachs introduced the concept of price to earnings, a ratio that would revolutionize the world of investing. And I talked about this during my Berkshire presentation, where during this period of time, they would value companies based on physical assets. And that's why Goldman Sachs was revolutionary when they brought price to earnings. As the firm grew, Goldman Sachs opened offices in Boston, Chicago, San Francisco, Philadelphia, St. Louis. In 1956, they were part of Ford Motor Company's historical 657 million IPO, adjusted to 6.6 billion. And Facebook IPO'd at 16.6 billion, and it was a tech company. It was the biggest at its time. So Ford was really big at that time too. In the 1970s, they opened their first offices overseas, London, Zurich, and Tokyo. In 1998, Goldman Sachs partners vote to take the firm public, for which they raised 3.6 billion at a share price of 53. By the end of the day, the stock had risen to 70. In 2014, Goldman Sachs launched Platform Marquee to advance trading, data security, big data management, and the ability to assess risks. Now, I don't know if anyone knows about the 1MDB scandal, but we'll take a brief summary of what happened. 1MDB is a state fund which purpose was to promote economic development in Malaysia. The fund was launched by former Prime Minister of Malaysia, Najib Razak, which is an old guy in the middle, his wife, the woman, and then Jolo, which was an accomplice that helped set up a lot of shell companies and bribe other banks around the world. From 2012 to 2013, Goldman Sachs helped raise 6.5 billion through 3 bond sales. And in 2016, after no significant investments and misappropriation was apparent, the DOJ started an investigation, and as we can see from the pictures, nothing was being done. US and Malaysian officials say more than 4.5 billion was misappropriated through a global scheme that incorporated many banks and shell companies. And they also used a concept called layering, where they send the money to different bank accounts around the world a bunch of times, one and again, until they can basically erase traces where the money came from. How was Goldman involved? First, as a fact, the underwriting earned Goldman Sachs 600 million in fees. And the DOJ said Goldman Sachs violated the anti-bribery provisions of the US Foreign Corrupt Practices Act. What does this mean? According to the DOJ, the charges stem from Goldman Sachs' central role in a global scheme to loot billions of dollars from the government-run Malaysian fund 1MDB. And more exactly, they used, the DOJ said, the use of those funds by senior Goldman bankers and their co-conspirators to pay billions of dollars in bribes to senior government officials around the world. And that's what I'm talking about whenever I show this picture about who they were paying to, because this is not an easy thing to do. They paid people in Abu Dhabi, Sweden, the Cayman Islands, and a bunch of other banks in the US too. Now, how much did Goldman pay in total? Any guesses? Billions, 1 billion, 2 billion, 3 billion? No, okay. 800 billion? No. 300? No. They paid 2.3 billion fine for breaking anti-bribery laws. This was paid to the DOJ. 600 million disgorged for illicit gains. Disgorged basically means they gave back whatever profit they make from their illicit activity. And they paid 3.9 billion to Malaysia in exchange for them to drop all criminal charges. A total of 6.8 billion. Now let's talk about the acquisition. NN Group is a Netherlands-based conglomerate that provides different financial services throughout its subsidiaries. NN Investment Partners is an asset manager under NN Group, and that's what Goldman Sachs is buying. They're not buying the rest, the whole company itself. Why is Goldman buying NN Investment Partners? 90% of NN Investment Partners are certified ESG. ESG stands for environmental, social governance, and investors are seeking out corporations that invest with ESG principles. This is a quote by the CEO of Goldman Sachs. The CEO of Goldman Sachs expressed their interest in expanding operations in Europe, and the acquisition advanced their commitment to put sustainability at the heart of their investment platform. And this is a big thing, not only in the investment world. Larry Fink from BlackRock saying that they want to put that as one of their main goals towards the future. And Goldman Sachs is another investment, another financial services bank doing the same thing. Goldman Sachs will be doubling their assets under management in Europe to more than 600 billion and overall assets under management to 2.8 trillion. And also the CEO mentioned that they wanted to get into insurance. And then the NN Group has a lot of insurance companies under their management, and they believe they can also benefit from learning from the insurance business. The deal, Goldman's purchase of NNIP will add 900 employees, 355 billion in assets under management. And lastly, one interesting thing about the deal is the deal includes a strategic partnership agreement with NN Group to manage 190 billion portfolio of assets for 10 years. So basically, Goldman Sachs will be managing one of NN Group's portfolios for 10 years. Now let's look at how the stocks were impacted. The acquisition was worth 1.9 billion. Okay, for the acquisition didn't impact that much. NN Group, additionally, they announced the deal on August 21, so basically 8 months before. And since the deal was also so small in terms for both corporations, it didn't make that much change for both for people and people buying the stock. That was 8 months earlier. The announcement made the stock look 3%. Now Goldman Sachs chart. Again, there was no visible change in the stock price. And another thing to consider is that during so the announcement was closed this Monday, and since last Friday, the S&P 500 is down 0.79%, and both Goldman Sachs and the NN Group are up 2%, 1.5% and 2%, which may be also that the S&P is kind of bringing down the announcement as a whole. Thank you. Feel free to ask any questions. And now this sweet spot. No, actually, no. Now Anna's going to talk. Okay, the guest speaker, Michael.
All right, we have a great guest speaker today, one of our alums from, I can't remember how long ago, somewhere between 2 and 20 years ago. I lose track, but this is Michael Kincaid. He's very active at UTSA, very active in Investment Society, was an MD, was in the sector wars, back when we still had full sector wars. Hopefully we'll have him again. Went to Costa Rica. I was trying to keep track of his career. He was very bold and did some pretty courageous things, which I love with UTSA alums. So he's doing something I think is really interesting, very different. Boston Consulting Group's a very famous firm. So he wants to talk about the consulting side. So, you know, I'll let him decide if he wants to be interrupted while he's speaking with questions, but we'll let you see how it goes. Maybe he'll stay around a little bit afterwards too, if you have other questions. Well, you for the Zoom.
Okay, everyone in Zoom needs the mic. Okay, so we're not using a PowerPoint. First question, who here knows what consulting is? I know I didn't. Okay. Does anyone here know BCG or is familiar with the firm? Okay, cool. Anyone want to give an explanation for what they think consulting is?
Somebody like comes to you seeking advice, you personally, and they pay you for the advice.
It's a pretty good explanation. Yeah. So is anyone here interested in consulting or primarily finance a little bit? Okay, cool. So I'll give a little bit of an overview of my background, how I ended up in consulting, what you could expect, why you might want to do it. So thanks for the introduction, Professor Sweet. So yeah, I was a treasurer here. I actually remember sitting in this classroom right where you were and randomly decided to stand up and run for the treasurer position. Turned out to be one of the better decisions I made. Upon graduating, I ended up starting a company. So it was initially like a B2C production company, so primarily serving individual clients. That turned into kind of organically more of a B2B business, serving brands such as like Mazda, National Geographic, Expedia, providing full service marketing, content, strategy, stuff like that. Really enjoyed the process of working with clients. Didn't really enjoy the industry after a few years. So I figured, all right, well, if I enjoy this process of actually helping to identify what the problem is that these people are facing and then putting together the resources to address it, then what better place to go than consulting? So went back to SMU, did my MBA, specialized in finance and strategy, and found myself at BCG. So I think what might be helpful is to give an overview of consulting and then maybe bust some myths. I had some fun photos, but I guess we'll go without them. So yeah, like you said, so consulting is basically problem solving. You're being hired by Fortune 500 companies to solve their most difficult problems. You're usually brought in for one of 2 or 3 different reasons. So you're brought in, to validate a board decision, quite frankly. If the board is considering investing $50, $100+ million capital expenditure over a particular time horizon, right? They want to have insurance. And they want to have people come in who are objective and can provide an outside-in perspective. So that's one reason you're brought in. Another reason you're brought in is because they don't have the internal capabilities to actually solve the problem. So one of the value adds that a consulting firm provides is that we've addressed problems in industries probably 50 times. So if a tech company comes to us and they're like, hey, we want to integrate this software, or we are having declining profitability despite increasing revenues, we've probably seen this happen at your other competitors. And so we can bring that to the table and then help actually drive real change. And by the way, I know I didn't say, but just interrupt me at any time. Happy to answer questions. So that at a high level is what you do. Very tactically, I know I remember sitting in y'all's seats and people would come in and talk about what they did. And I always left wondering what they actually did. And so quite frankly, what I do day to day is build PowerPoints. That's really all it is. If you go do banking, you're pretty much doing the same thing, by the way. So it's not all that different. The difference between banking versus consulting, I might say, is we're both at the table in a lot of deals. So a bit of context for what I've done in consulting is I first worked on a utility doing change management. So it was a growth strategy case that we defined market potential. And then we ultimately said, okay, here's how you can actually realize that potential through partnerships and other means. Then I moved into a technology case in semiconductors and did pricing work. So implemented game theory into how do you actually adjust your prices in essentially a zero-sum game. And then I moved into the crypto space and I was on a buy-side private equity due diligence and helping a private equity firm, evaluate a few $100 million deal. And as I mentioned, we were on one side of the deal and bankers were on the other side of the deal. So ultimately you're creating IC work. So you're creating the investment committee material for them to evaluate this potential. Now I'm just wrapping up an industrial goods sell side due diligence. You're basically representing the other side of the deal. So they want to sell a position and the buy side wants to invest in a position. One of the appeals of consulting is you can see a bunch of different industries and a bunch of different problems. And so ultimately, you're building PowerPoints, but there's a lot that goes into that. There's the quantitative aspect of it. The associates and the consultants are doing all of that. You have a lot of high profile exposure. You're sitting in meetings with CEOs and CFOs and you're delivering your recommendation to them. And if not to them, then to your senior leadership. And so it provides a lot of exposure, and the toolkit that you develop ultimately has led to a considerable number. I think we might still hold the top score for most Fortune 500 CEO alumni. We have people at Fortune 500 companies, at startups, all sorts of different opportunities. So that's kind of a general overview. I'd stop there to see if there are any questions. Yeah.
What's the most tedious or most difficult problem you have faced?
Most tedious or most difficult problem? So the nature of the job is very ambiguous. right? So that's why you're brought in, is you're basically tasked with solving very unstructured questions and structuring them. So I would throw it back to you. Like, how would you size the crypto market, right? So there are objective, largely objective measures like market cap. But then if I were to ask you, well, if I'm considering evaluating in this company, what criteria should I base that on? And even in the specific context of like market size, how would you actually go about projecting what you think that market size is going to be in an industry where there's like such limited data? And there are really interesting ways that you can go about doing that. And that was basically what so I actually, that was my project, is like, all right, how can you take the traditional equities market and how can you apply that to the crypto space? Sorry, I have to like speak around some stuff for confidentiality, but yeah, basically you're able to work on really difficult problems. And how do you partner with private companies to deliver products and services as a utility, right? So really big questions like that. And they're important though, like they're important because they could mean hundreds of millions of dollars in incremental revenue for companies, or if you're brought in for potentially a cost issue, you're making serious decisions from day one. You're defining the organization structure, you're defining, what are the role titles going to be, what are the responsibilities going to be, who's going to have a job, who's not going to have a job. There are projects where the compensation for the project is strictly based on how much can you save, right? So you're put into these really high pressure, very difficult situations very quickly. Anyone else?
You commonly work with data analysts and data scientists. You guys have your own.
Yeah. So both. We're expected to be like the front line of data analysis, right? So as a consultant, which is depending on the firm, it's like the second role at BCG. At like a McKinsey, they flip the titles a little bit. But yeah, so you're expected to own ultimately your work stream, and pretty much from day one. So if I brought you onto a project and we were trying to grow revenue at some company, there are going to be a bunch of different tasks, right? And I might be like, hey, you're going to size this market. And you're basically expected to do everything that's necessary to bring to the table a recommendation, quantifiably, as quantifiably as you can, so that we can actually like provide that as a basis for a decision. So to that end, there are internal resources we have, and all they do is they're data specialists. So we'll leverage them at times, but like me and Professor C were just talking about, I use Tableau and Alteryx all the time. So anything else?
I got a question.
Yeah.
You spoke on the, relationship between banking and consulting. Do you mind elaborating on some of those differences and similarities? Just because I am kind of curious into pursuing a career into banking, but hypothetically speaking, if that doesn't work out, is there any room for consulting from banking or vice versa? Or can you elaborate on that? Yeah, so Professor Sweet nailed it earlier. A few people were part of that conversation. So generally speaking, you can go from investment banking to consulting. It's going to be harder to go from consulting to investment banking. The difference is your exit opportunities. So this is where I had some beautiful slides to show you on this. But so the exit opportunities for banking are a little bit different than consulting. So depending on your role, right, an associate I work with, you can go straight from being an associate into private equity if you're at like a top firm. Or if you're kind of management level at a consulting firm, you'll go as like a VP of strategy at a corporation. And you'll take a pay cut, but your hours will get cut in half. So that's why people do it. Banking, if you don't stay there long term, a lot of people have similar exit opportunities. They want to go into venture capital. So a little bit different, but they go into VC, private equity, kind of what I've seen. I guess as far as the differences, one of my colleagues from business school, he's at Guggenheim Investment Banking on the oil and gas desk there. So they're doing much more of like the valuation and the actual like deal structuring versus the like outside in analysis. So you're doing primarily modeling in banking. I haven't been an investment banker, but from my understanding,
they're primarily doing modeling and valuation. So if you're on a live deal, you're basically saying like, okay, here's how much you should pay for them and why. And we're doing the same thing, but it's usually from a little bit different angle. So on a due diligence, where we're essentially saying, hey, should you invest in this company? We're usually covering like 3 or 4 things. So market sizing, where you essentially say, here's how big the market is, here's how attractive the market is. Then you look at the competitive landscape. So how is the company positioned compared to everything else? You do customer insights. So you say, okay, well, how is this company perceived from people that it sells to? You do largely things you've probably heard of, Porter's 5 forces, but much, much more in depth. So I'm not sure if that answers your questions. I haven't been a banker, but that's kind of my take of it. So
Appreciate it. Yeah.
Brandon on Zoom is asking, what is the atmosphere like sitting with CEOs, CFOs, etc., when they are looking to you for your advice?
It's tense. It's really high pressure. I'm not gonna lie to you. It's a very, very stressful job. You work a lot of hours, but it's rewarding because you get to work with really smart people. So you work on difficult problems that matter, that have a tangible impact most of the time that you can see. There's not always value being delivered, but yeah, when you're in that room and you're expected to be the subject matter expert on your particular content, it's certainly high pressure.
Have there been any companies that you rejected or that you can't solve the problem for them?
Yeah, I mean, we turned down. I'm so far removed from like 5 levels below, the people selling the projects, but I work with them. Yeah, we turn down work all the time. The basis for which we do, I'm not sure obviously all the time, but yeah, it's a funny question. I laugh because there are certain types of projects where inherently there isn't really an answer. Like there isn't necessarily a solution, and those are obviously the most difficult. A lot of like IT cases can be like that. They're very, very difficult. Any other questions? Yeah.
Was there anything that kind of blindsided you like coming into the industry and consulting?
That's a good question. Hours are real. That's where I want to address your question, but that's where I was going to head. So I was discussing earlier with Professor Sui and a few others. I think one of the more useful things I can do is kind of discuss with you all, like, when you're considering a career, you have so many options, but it's ultimately about like becoming an expert in whatever you choose to do. And so I remember when I was in your seats, I felt like all this pressure. I have to like choose the right one. Like I have to choose like, is it banking or is it consulting? Like which one is it? Because I don't want to like, ruin my life 20 years from now. And what I'll tell you is, it'll be fine. You have different ways to get to different outcomes. And ultimately, like what I would urge you to do is like consider like what kind of life you want to live. This is kind of getting philosophical, but like consider like, what do you value? Like, what do you want to do? Because I think there's often an emphasis, maybe an overemphasis on the prestige of the place you work. Is it Goldman Sachs? Is it BCG McKinsey? Is it one of these places? And while there's value in that name brand for pivoting into other things, there are also cons, right? So I average probably 75 hours a week. There are people that, and those are real hours, by the way. Like it's not like I'm studying for 6 hours because I've deluded myself into believing I studied more than I did. But yeah, I mean, you have long hours. I average probably 70, 75. I've had some in the 90s, especially on like private equity due diligences. It's like banking. And I would tell you, my colleagues from business school and banking, they work just as much, if not more. 2 weeks ago, I had 3 nights until 2 a.m. And you still have to be there at 8 a.m. meeting. So yeah, I mean that's the reality of it. So there are trade-offs to everything. And so that was definitely definitely a blindsiding. Like, oh wow, you start out and you're like, wow, why are they paying me so much? And then like 6 months in, you're like, wow, I don't know if they're paying me enough. But yeah, I would say that's probably the most surprising. I think you had a question.
Yeah, I wanted to ask you about your business like right after college. I wanted to ask you, how was like getting your first client and then getting the second one? What was the process of that?
Oh wow, we're going back to that. Good question. So ultimately, the clients came from, it's all relationships, but it's also about like the quality of work. And so first ones were free. I mean, I'm a big advocate that like the market is pretty efficient. I know y'all hear that a lot from Professor Sweet, and I found that to be true in business, right? Like I did consulting for like businesses when I was running mine, and people would often come to me and it's like, hey, it had all this gear, $30,000 of equipment, and they're like, hey, why don't I have more clients? And ultimately, the market is really good at knowing like, hey, does this guy provide me value? Does this guy have good content? Can he deliver to me what I need? And so, yeah, when you start out, I mean, I invested money and time and traveling to develop a portfolio and to work with clients. And the first one was free, and then the next one was $500, and then the next one was $1,000. And you figure out where you fit in the market based on the type of the work you're doing. But what I would say, at least in that industry, is that the most valuable marketing is word of mouth. And if you build it up right, then you don't really ever have to seek out clients unless you like want to work with them. So you do for a while, and it's tough. You create a media kit, you create marketing copy, and you send it out to people, like Mazda, right? So they didn't like reach out to me. That was responding to an RFP. It was developing, probably spending 30 hours developing an entire, essentially, presentation for like, hey, why should you? What am I going to charge? What am I going to deliver? What are the logistics? How am I going to do it? So that's kind of my experience. But does that answer your question?
Oh yeah,
Okay.
perfectly.
Cool. Well, I guess one thing I would do, because it seems like most of y'all are like pretty familiar with consulting. I think I've probably addressed some of them, but there are like some pretty common myths I think that are relevant in consulting, and I think they're worth kind of like discussing. So there's definitely this myth that like you living this glamorous lifestyle, flying first class, staying at the Ritz, and you are. I mean, I flew first class to the Ritz a few weeks ago, but I worked on the whole plane ride. There's a lady snoring behind me. There's a child screaming next to me, and my boss is messaging me, "Hey, when is this slide going to be done? What's the answer to this question? What does your analysis say on this?" Right? So I'll say that the food in first class doesn't taste nearly as good as if you were just riding for fun. And you stay in nice hotels, and you tend to sit in there working until midnight a lot of nights. So yeah, there are definitely perks that make it more fun, but it obviously comes with a high expectation. I think another commonly held myth is that actually I'm curious, like, do you have any conceived notions of like what consulting is? I think someone else, like, what do you actually do? Was that you? Yeah, he was like, it's like, I always hear consultants say all these words, and then I never understand like what they're actually doing. So there's definitely there can be a preconceived notion that like we're just saying a lot of things and not actually like, technically doing anything. And I would say there are certainly components of every job where you're not adding value. The same can be said about investment banking for sure, based on conversations I've had. But the cool thing is, and the surprising thing is, there are a lot of problems in a lot of companies. And getting to see behind that curtain and see like, okay, what are these issues that they're actually facing and oftentimes not solving is pretty cool. Like, you'd be amazed. I mean, any one of y'all could walk in and be like, why are you not doing this? Like, you experience it in your day-to-day lives, like frictions with businesses. or poor experiences with like customer service, right? Like, has anyone called like AT&T? Right? Like, I mean, and then you get to work on that. And then you come to oftentimes have an appreciation. You're like, wow, this is really complicated. It shouldn't be, but it is. So then it's a matter of how do you actually go about solving that. So any other questions? Like so what grade is everyone in? Who's a senior? Raise your hand. Okay. SWAT. Junior. Guess that's pretty much everyone else. Sophomore and freshman. Okay, cool. So do any of y'all like already know where you're going with the seniors? So consider things. Okay. I don't know where I'm at on time. How much time do I have? 3 minutes? Cool. Yeah, you're like 3 minutes. Please be done. Yeah, I mean, I'm happy to talk with anyone else after who has any questions. I can provide you a link as far as like application. I can talk you through process because it's a little bit different depending on what grade you're in, like where you are. If you're a senior right now at this point, you would apply through rolling applications. It wouldn't be part of the standard pipeline. If you're a junior, then I would definitely consider like, hey, get in touch with me. We can talk. If you're actually interested, I can help you with your resume. I can help you with interview prep and help get you into the cycle. It would be fall of your senior year that you would be applying for a full-time role. And if you're a sophomore, definitely consider doing like an internship for an associate role. And again, that's going to be a different cycle. And much like banking, it's going to be like right at the beginning, like August through October. So yeah. If there are any other questions, consulting, business school, yeah.
One final question from Zoom. What do you believe your specialty is that made you a good fit for consulting?
Oh man. I had a few slides on that. So the recruiting process is interesting. I actually went through it twice at BCG. So I applied for an associate role in the New York office, which in hindsight was probably dumb because it's the hardest office to get into. But made it through final rounds and didn't get the offer. So then I went through all over again during business school, and it worked out. And I have guesses as to why this time and why it didn't work, but you really never know. So I hesitate to answer like why I think I'm special because I'm still figuring it out. But what I would tell you is there are definitely certain things that they look for. So it's a track record of success. And it can be in anything. And that's the cool thing about consulting firms. Each one has its own culture. Some value prestige a little bit more. What school did you go to? But what I can tell you about BCG is there are people from all sorts of different degrees and different backgrounds, and they're all successful. And ultimately what they're looking at is, are you intellectually curious? Do you like to learn? Do you have a track record of success? Do you have what comes with it? Did you do well in school? Do you have the good grades? Are you outside of school? Yeah, I mean, there are a lot of things that go. I would tell you that, like, if you want to go to like a top firm, it's way more difficult than being at UTSA. So it's an entirely different process, just like totally transparent. I mean, this year was the first year that we even started recruiting intentionally at SMU. And like, I think it's like 30 in the country or something like that, which is decent, but not great. And I think Professor Sweet and others alumni have done a great job, like helping get other firms here, like Goldman and whatnot. But to that end, there are a lot of different areas. So happy to help anyone here who's interested in getting into consulting or at my firm for sure.
Last question. What's one or two things you wish you'd done differently at UTSA while you were here?
I graduated early. Yeah. So I graduated a year early. In my mind, I'm like, oh, this is great. I'm going to finish early. And then I was like, wow, the real world is hard. So definitely. Maybe that's not the advice Professor Sweet wanted me to give you, but there's a lot of value that you have, like, while being here. I mean, get to know each other. You'll be surprised, like, where everyone ends up. I mean, If you guys have heard of like Ricardo, he was a former president, Goldman trader. He's at Stanford now. We were just talking a couple of weeks ago, and he's doing really cool stuff. I mean, Eric Moss, he was vice president of this Chicago Trading Company. I would literally hang out with him in Chicago a few weeks ago. Like, your network is really, really valuable. And I definitely didn't appreciate that when I was here. And especially like this group is like really, because you're all choosing to be here on a Wednesday? On a Wednesday, right? On a Wednesday night to talk about finance, which is super nerdy. And, but it's cool. So yeah, definitely like get to know each other. I would say one thing I would also have done differently is, this is kind of unfair to some of you, but I didn't even know about some of the like cycles of recruiting early enough. But I feel like when you're 18, 19, freshman, sophomore, like the fact that as a sophomore, you're not even in your core classes yet, and basically you should be considering like, what does my resume look like? What firms am I interested in? What do I want to do? Having conversations is something that like wasn't even really on my radar. So obviously that makes it a little bit more difficult.
That's why I say freshman and sophomore teaching classes being in sectors gives them such a huge advantage over the freshman and sophomore.
Yeah, well, definitely something I would do again is be involved as much as you can, because that's a differentiator when you go and interview. They're going to ask tough questions no matter where you go. Some harder than others, and the more you can speak to experiences rather than like theory, stuff like that, the better you're going to sound. Like, it might seem trivial, but even in ECG, they asked me questions and I spoke to stuff like here. They're like talking about a time this happened. I'm like, okay, well, when I was like leading the consumer staple sector, we had this disagreement. You can answer all those questions.
Can y'all hear me? Okay, now it's on. Okay, great. Thank you for presenting. And hopefully we could get your slides, your beautiful slides you made, emailed, and we'll share it, hopefully, and to get to answer the few questions we missed on Zoom here for the lack of time. But real quick, important topic for today's meeting is the MD elections. Like Michael mentioned, be involved. You're going to want to be an MD when you're in the middle of interviews. So I'll break this into parts real quick here. And MDs, please correct me if I'm forgetting something or saying something wrong. So in order to run, we kind of changed it up a bit, and we just highly suggest a one slide presentation, 1 or 2 slide presentation while you're up here and presenting, but it's not necessary. You won't need it. So if you want to run without a slide, that's totally fine. Just let us know, or let us know right before. I know sometimes you're debating whether to run for an empty position or not. So if it occurs on the spot or ahead of time, just let us know and you can definitely still run. So the requirements, if you do decide to create a slide, we would appreciate you all to email us at utsainvestors@gmail.com. I said that fast, but it's going to be on our media. I'll let y'all know and it's up there. So you'll email us and we'll actually email you back to confirm that, okay, you're running for X position and you'll be presenting first or third, depending on the order of submissions we received for that specific empty position. Did that make sense? Perfect. Okay. And once again, all positions are available. The ones for 2 semesters are the first 3, president, VP, and treasurer. And the sooner you submit us the slide, the sooner you'll be able to present here on April 20th, mark the date. And the way elections will run, like as for the voting matters on the date of, we'll be voting as soon as we're all here present. So we'll start that at the beginning of the meeting. And it'll be in a traditional way, unlike last semester. So we're actually going to give you a sheet of paper where you fill in the name of the person you want to vote for, as well as their presenter number. So let's say I present first for president. You'll write my name as well as the number in front, just to make sure. I have messy handwriting. Sometimes I might not understand what I write, so I'll write number 2, 3, it's easier to read. Any questions on this? It's quite a bit. So definitely highly suggest to be in person to vote, but if you can't, for some case, not be in person, you can still vote through Zoom. We'll send out a unique link only for those in the Zoom channel, the chat, and you'll get a simple Google form. Same process, well, you'll type the name as well as their presenter. Yes.
So like one thing, if you're running for, say, like your first spot is you want to run for like treasurer or something, if you don't get that, pretty much what you can do is like run again for market outlook. So if you don't get your first option, you can run again as many times as you want until you land on the one that you get elected for, essentially.
Correct. Yeah. So you'll still have the opportunity to run for quite a few empty positions in case you don't get the first one you want. But the order of presentations and voting will occur as you see here on the list. So obviously we need our president first, VP down the line. So, and another thing for when you're running, we as a MD have decided that you have to be present at least 80% of the time for in-person meetings. So if you're gonna market outlook or even VP, we need y'all to be in person 80% of the time. Except social chair. For that, you don't really have to be in person for recent part, besides the times when you have to promote the next social event here. Any questions on that? Quite a bit of info. Yes.
Okay, so right now, the VP, I don't exactly know what the role is, other than they're called the VP. What does the VP currently do?
So our VP currently, you've seen him active on our videos. He's out there sending the links and friendly reminders here and whatnot. And he also does teach a class. He used to teach a class as well. But overall assistance and management of the overall society. So if one of our MDs needs help, the VP's there, especially next semester. If I'm president, it's kind of side. But the VP will be much closer to the marketing director, helping run those matters. Any other questions? I could summarize this as well and put it on our Discord and Telegram chat just in case, as well as the email. The email is the critical info. So the next slide here, we actually have an example slide for if you're running for a position. You can make your slides look something like this. Maybe less or more information, up to you. Make it you. Make the slide speak why you're running for the investment society, what you're gonna bring to the investment society, and who you are as an individual. Just a quick example here. Any final questions on that? Definitely feel free to send something. Okay, gift card winners. Let's get to the good stuff. I'll take it. So actually, thank you to Peyton last week, who had won a gift card, but he decided to give it to one extra member this meeting. We're giving out a total of 3 gift cards. So the first winner here is, little drum roll. And we got 2 more. Another drum roll. Great. And a final one. Yes. I'll receive $25 gift card from the Investment Society. At the end of the meeting right now, just give me your email and we should be good. And once again, the end of our meeting, join our network. Here's where you can get all their